All right, good afternoon, everyone, and welcome to the part two of our special women trading event. And with us today, we have Hilary Kramer. Hilary, whenever you're ready, you can take it
Oh,
away.
I certainly am. What an exciting day we have to be doing this. It's just proof that there's room in that portfolio, yes, for long-term investing, building a portfolio, growth, income, but trading, options trading, stock trading fits right in there when you see that volatility. So I am Hilary Kramer, and welcome to my presentation. And I have 6 investment newsletters. My specialty is stocks, investing. I am one of the top options traders in the country. That's how I ended up with options newsletters, where I have subscribers that I advise on investing, and we put out options. So I welcome you, and we are going to first, for those of you who aren't familiar with me, walk through my background. I have been on Wall Street now since 1986. I have seen every up and down market. I have lived through every crash and every bull, and the market can be very cruel to those that don't have discipline, that go over concentrated on any one position, and it can be really bad with anyone who is too greedy and too fearful. The key is to make sure that you're careful, that you don't overextend. And my favorite mantra for all of you, anytime you have to use the word I pray that I don't lose money, I pray I'm going to make it big on this one, it's not the right investment. No, that's not what you should be doing. The key is to be able to make these investments, get in and out, have the discipline, and have the expertise. And what I do with my team, and I have a team of 3 analyst traders that work specifically just on my options newsletters with me, because it works so fast and so quick. I couldn't even be on a presentation like this if it were me alone. First of all, understand that when it comes to options and trading, it takes a team and it takes experience. So we are in and out of those investments all the time. We are trading. I am also, just to back up for a minute, anyone who listens to any of the AM talk shows, actually I'm on FM also, I am a radio host. I have the Kramer's Millionaire Maker, which is national, on over 100 stations every weekend from coast to coast. I'm from New York to California, and there I give advice on stocks. So I have seen all of these markets, and what I do, and what people come to me for, whether it's listening to me on the radio, being a subscriber to my investment newsletters, I have the experience to make you money. So where did I get that experience? It comes from the fact that that's what I do, that's all I do. And as I was trying to say, is it takes a team. You can't do it on your own when it comes to true trading and options. You need either, I have to say, some of the systems are amazing that you can use. That's one way to do it. I'm a huge believer in the technology aspect of trading, and as well having those that can guide you and jump you in and out of positions. Right now, my 3rd book, Game Changer Investing, Profiting from Billion-Dollar Trends, I am on the Wall Street Journal bestsellers list. I'm number 7, and I am on USA Today's bestsellers list that combines fiction and nonfiction. And I have been, for the past month and a half, since my 3rd book came out in January, I've been number 1 on Amazon in a number of different sectors, including investment strategies and analysis, investing, money, and finance. So my book has set the tone in terms of being somewhat almost revolutionary in taking a new approach to what tomorrow's big opportunities are. I also was one of the first family office chief investment officers. worked for a billionaire, managed $5 billion. It wasn't 5 billion when I started, it was 1.2 billion, and I grew it to 5 billion. Then I retired and was just commentating, writing, and I was asked to start investment newsletters. And so I had enough amazing analysts and colleagues that I thought, okay, we can give it a try. And it's just been wonderful, and it's a great opportunity for me to help individual investors learn to invest. So let's talk about the market. And I do want to make the point, I am a woman, and in Wall Street, so few women really are there. You walk on the stock exchange floor. I was there last week at the New York Stock Exchange. My office is actually a block away. And there's no women there. There's no women. And to a great extent, it's because I think women are really, they're really intimidated by the whole concept of managing money, when it's really right up our alley, and it's what women can do best. In many ways, we have the ability to be able to multitask, and the way that I look at the market, and you'll see as we walk through this presentation, what I do is I am able to combine macro factors with fundamental investing, along with market trends and looking at the charts themselves. So we use a combination of all of that. And in 2-Day Trader, which I'm going to be introducing you to, it's been an absolutely phenomenal, unbelievable, technically impossible return, but we have done it because we have been able to apply a very specific formula, but a formula that combines so much. It's not just one idea, one thought, one person. It is experience that helped us build the model that allows us to recognize opportunities, and then it's good old-fashioned watching and using our experience to go in and out. So if you take a look at volatility, I mean, what have we been going through? Everyone has become so complacent with the market, not realizing until all this coronavirus combined with concerns that maybe we are overbought or we're overbought, combined with concerns that maybe Bernie Sanders becomes the next president in the White House. All of that created a trifecta of a massive 12% drop in the market last week. So volatility is the name of the game. So many people will tell you they know what they're doing. Anyone can make money in a market that just goes up. Look at where we stand. We are up 80% in 5 years, okay? But in the average on the S&P 500 is actually closer to about 8% a year. So we have been having a performance that is exceptional, and much of it has been produced by the fact that in 2008, 2009, peak to trough, we went down 67%, and we hit those lows on the S&P 500, 666. So, you know, we've quintupled since there. So let's think about this. What made us end up in the situation we're in? Of course, then the market is doing, now we're really experiencing volatility, seeing how on a day like today, the market suddenly turned, then it turned red, then it turned green, then it's off to the races, all because of expectations about the Federal Reserve. And tomorrow there could be coronavirus concerns and this market's going to come down. All of that is what makes our investment newsletter, 2-Day Trader options, do so well. This is our time to shine. So what killed this bull market? I gave you the 3 trifecta, right? Coronavirus, politics, and being overbought. Okay, so basically just where we were in terms of performance. There are a number of other reasons as well. We really do have a glut of oil in the world, and that is creating a self-fulfilling prophecy of more oil out there. I mean, technology has changed everything, including the what was once a dream of efficiency and green, sort of green technology, clean energy, has become a reality. And the technology to extract oil out of the ground, the technology to process oil into gasoline, into chemicals, petroleum, all of that has become a much easier process. So there we have it. And the government, ours and the equivalent of feds all over the world, has made it very easy by dropping rates so low. Oh, and why is that? When you drop rates, then money starts sloshing around. Anybody can make money when money's free. And individual investors have been able to enjoy the fruits of that. And those that have been in the inner sanctum have gone from being some poor people to billionaires, and some millionaires to being billionaires, and some very wealthy millionaires to being multi-billionaires. So in many ways, we've really had a dichotomy in the system. Everyone feels much more wealthy. We have gone from, I think it was 16,000 millionaires in their 401k, okay, to 54,000 in their 401k who are millionaires in 12 months. 12 months. So a lot of people have been enjoying the fruits of a market that keeps going up. What you can see here in this particular chart that I have up are the retracements. You really want to be both invested for the long term. I'll say it again. You want to be in that market and be thinking in terms of decades with some of your investments and building a portfolio. You want to be in that market and enjoying following us and being a subscriber with us, where we're putting you in stocks. Let's say we have a value newsletter. As the market, we originally intended to have holds of 3 years. We've had this value newsletter for 7 years now, and our trades are for approximately 3 months because the market keeps doing so well. We keep selling out. That we're a different kind of market, we'd be sitting in with those. But this chart shows you how the market, you can try to time it. If you bought in October 2019, you can see how this market falls. And I mean, the worst of all was Christmas Eve 2018. Well, got a lot of coal that day, and it was just a vicious market, and it came back. We've had an incredible rally. In many ways, we're really only back to where we were last October, and we're in the second day of March. So we have lots of opportunities for us. And the key to always remember when it comes to investing short-term options trading, stock trading, you lose that money. You lose that money, it's the zero-sum game. If you lose it, you don't have it to live for the next investment. What we do, and you're going to see our returns very shortly, we make sure that you never get blown out of the market. You're always able to make money and go into the next trade. That's what we care about. Winners, losers, downswings, they all play out within 80 days. One of the biggest problems you're going to find out from what happened last week with that 12% downturn in the market is how many people are kicking themselves because they sold. They're piling in and buying on a day like today where the market goes up 500 points because now they're upset. They go from greed to fear last week to greed again. I'm going to make sure that you don't do that. What do? Every day counts for us. Every single day. So what we're doing is we are trading and we are making sure we get these wins, these smaller wins and beats. Let me tell you about leverage, which is really what options are giving you. If you buy an option instead of a share, here's a good example I have for you. One share of the index fund costs $300. You book a 1.2% profit. You get $3, and you make $3.60. If you buy an option instead of a share, that $3.60 can be massive, 10 times over. So what you want to do is always have a small percentage of your portfolio in options and make big, huge money in that. Those short-term options are very, very volatile. The underlying moves, okay, you know, of even 1%, we can get a double. We can get 100% profit there. We are looking at these shorter term options in the indices. That's what we do in Two-Day Trader. So what indexes do I use? I use the S&P, the SPY, the QQQ, tracks the NASDAQ. I track biotech, utilities, and the VXX, market volatility. And I've also gone in there at times with the banking index. So we know these stocks and we know these underlying sectors. We understand how these indices are going to move. And there are these options that expire that are daily on Monday, Wednesday, Friday expirations and Friday expirations. But these 3 times a week expirations, we're going in there and you're holding on to these ETFs for at the most 2 days. What we do is we just keep that money moving. I was presenting at a money show in October in Philadelphia, and a man flew in from Michigan, and he didn't leave my side, and he said, all over and over again, he said, I started with $60,000. I ended up with, okay, so this is October. I ended up with $230,000. He said, I just pulled $60,000 out and bought my mother a minivan, which she needed. So now I'm sitting on $170,000, and I've taken the 60 out, and I started with 60. Well, I told him to stop that, like to stop rolling everything into the next trade. And now that he's gotten that kind of return, only put $1,000 to $5,000. I actually said even $500 is fine into each trade, because you can see how fast you can make money. But the market is fickle. We don't know what we don't know. No one dreamed or imagined coronavirus. No one dreamed or imagined an earthquake in Japan or terrorist acts. You have to always be prepared and know that you can blow up and lose it all. When you do options, you got to stick with the real professionals who know, because you're not playing just a particular position. You're playing against the clock. That daily grind is what we do, okay? We pick that fund, we watch it, we have our particular model built that tells us what we should be looking at from the technical angle. And of course, as I said, we're looking at the fundamentals, and we're looking at the macro. We're looking at the timing of earnings. We are looking at the timing of regulations, political events, geopolitical events. You know, tax policy is key. One of the biggest movements in macro trends comes from the Federal Reserve and changes, not just changes in actual rate cuts or rate tightening. It's also just what Fed Chairman Powell has to say can move everything. But these numbers, small numbers, they kick in and they compound very, very fast. Let me show you some of our trades. It is phenomenal, incredible. Here you go. You can see how tiny trades, they add up fast. Okay, these are actual options, and how our returns, if you see returns 6%, 8%, 13%, 10%, $13,000 in less than 5 months becomes $54,000. And it's so much fun what we do, because it moves and it moves fast, but at the same time, you know, we're dealing with just these specific 5, and as I said, sometimes additional indices in an area where we think it may make sense, and we are turning this into a massive profit. Here's a great example. We were in at 25 cents, out at 27 cents. Everyone was able to get in, everyone was able to get out. If I say you get in at 25 and out at 27, you probably got in at 24 and out at 28. That's an 8% gain at the very least. You do that in 2 days. That's what we do for you. You do that all the time over the course of a year, you're going to have a 1,460% gain. Take a look at what we did here in utilities. We bought the April 22nd, $56 call options, bought at 32, sold at 35 cents, 9% gain, and all of these arc up over times. Let me give you an anatomy of a great two-day trader. This is, I think, one of the best. Well, we have a few case studies in here, but let me start with this one. Okay, take a look at the timing here. The Fed had cut interest rates, the bond yields declined, and it was just enough to push money into utilities as a substitute. What I call a substitute, what happens is if it looks like you can't get any return from your bonds, right? The fact that you can't make anything on CDs anymore, utilities have become the de facto default secure money CD maker, even though utilities, it's still a stock and it still can go down, but that is what happens when rates are near 0%. So here we are. What did we do here? Wow, we booked 6% in 2 days. Okay, 6%. Here we go. When it's working, you're going to see us go back over and over again. Here, we saw the utilities, and you know what the utility sector is. Those are your Con Edisons and your Duke Power and your Portland General and Hawaii Electric. That's what companies we're talking about here. So here, okay, so we exited a put position, and then the sector dropped 1.1%, covered our options, and right here we sold up 20.8% above what we paid, and the gains just continue to compound. So in a week, we were up 28%, combining the 2 utility trades that we did in a 1 week period. So you see here, my title is Sideways Market, okay? Squeezing cash out of a sideways market. That's the beauty of two-day trader. Again, the days are over. You are not going to be able to just have a portfolio and have Boeing and Microsoft and Apple and Visa and McDonald's and Illinois Tool and expect that you're going to double. Those days are done. They're really done if you think that you can buy the FANG stocks. Can you just buy Amazon and 3 years later be looking at a double or up 50%? We're not going to go from $1 trillion company to a $2 trillion company. But we are going to have changes in volatility on Amazon stock, on Facebook stock, on Netflix and Google, which make up the FANG, as we say. Accentuate the positive, okay? These are the industrials. That's the XLI. So the industrials are your 3Ms and your Honeywells, your GEs, and it's I just talked ITW, or Illinois Tool Works. So we bought calls, right, that we thought that the sector was going to move above the 74.55 level. So that would only be a 0.6% increase on the prevailing ETF price. It only took a few hours, and we cashed out with a 13% gain. And what we do is we actually give you the trade. We tell you exactly what to buy, exactly what to sell. And options are tricky. Options are tricky, and that's why we've gone into the spotlight so much, and there's so much demand in hearing what Hilary Kramer is thinking, because I'm in a position where I am able to make everyone so much money. And it's in so many ways such a simple model, in that we have these 5 indices and we're buying these options that expire, that are daily options. They expire on Monday, Wednesdays, and Fridays, but it is phenomenal. Here we have a market bounce, 1.5%. The day after the S&P was down 2.3%, and we cashed out with $1.34 profit on every $3.70 contract. We made 36% in 48 hours. That's what we did. Now, when you add up all those trades, Okay, we've taken 42 positions in the last 35 weeks. We earned only an average of 6.3% on each. That's it. But we're up 148% over that period. If you bought and held the S&P 500 in that same period of time, those 35 weeks, I don't even think you'd be break even. And you could also, of course, if you wanted to be more concentrated, less concentrated, you can make that choice. But what we recommend is that consistently, let's say you take $1,000 on every single trade. And as I said, many of our investors, many of our subscribers, they go for rolling it all into the next trade, which I highly scold them all for doing. But they know that we come through and we continue to make those returns, and very few options. You'll very rarely see what we do, which is we'll be in an option, and if we decide it's not doing well, we'll get out at a 15% loss. Usually what you'll see when people tell you that they have, these experts will tell you that they did 550% winners in a row. What you don't know is that there were 20, 150, or 100% losers before, and 100, and 20, 100% losers afterwards. We're about consistency. It's consistency, consistency. Other comparable strategies, okay, utilities, okay, a 3% gain over the last 8 months. But, for us, the utilities have produced gains of upwards of 300% in that same time period. Here we are. Here's look at the industrials, going back to our start to where we are now, down 6%, and yet we have this phenomenal return. Okay, now here's VXX. This is trading volatility. So you're making an option, you're taking a bet on whether an option to be able to buy volatility, which when fear is high, volatility is high. When there's complacency, volatility drops. We just got in and out, and you can see how volatility goes down, spikes. We're able to enjoy and take advantage of those VXXs, the volatility options. Here's a really good example. May 1st, 2019, 54 cents. 2 days later, 58 cents, 7.4% win. Again, all of these add up because we have the consistency. Now, we have the opportunity for you to come in and try 2-day trader, okay? And I want you to know that it's a money back. You get your money back. No questions asked in the first 30 days. If it's not making you money, if you're not happy, if you change your mind, if you thought you were too rash in making the decision, or if options just aren't for you. But our subscribers do pay $1,295 a year. That is what they pay. That is what they come on for. We really want to see. We want to see new women, new blood into the options, because it's such a phenomenal way to make money. It's such a fun and exciting way to make money. And what you're buying is the expertise, and you're going to make your $199 for the first 3 months back in the very first trade. Thank you so much. I would love to answer your questions, any kind of questions at all about what I do, but also the market. Ask away about specific stocks, about what you see going on in the market, what you're wondering about. Specifically, are there questions that you have on this market? So I'm opening the floor, and I look forward to hearing from you.
Hey, Hilary, how do people get the offer you mentioned? Is there a link, or do they just contact you, or what?
Oh, let's see. Why is the link not here? There should have been a link in here. All you have to do is go to, let's see, there's a link. Click the link. So I think what we do is we can send that to you, David, to send out to those that are online and watching this and want to give 2-Day Trader a try. And of course, we also have other letters as well. I think that's what we're going to do. And
Okay. Yeah, I can include that in the archive if you
how
send me
about
the link.
that? If everyone receives that opportunity, you're going to click there. If you have any questions or anything whatsoever, you can go to HilaryKramer.com and you'll be taken right over to my homepage. And there's a phone number that you can dial. And I have a full-time customer service professional, and he will answer whatever questions that you have. I also have those that will take orders from you, or if you want to just sign up, but there's a phone number if you have specific questions and you want to make sure that you get this $199 introductory price for the first 3 months. And do expect from David, he will put out there, I don't know if you're putting it online or sending it to all of those that are, I think you're sending it to everyone who has signed up for this amazing event, which I'm so happy
Yes.
and thankful that you have put together, and appreciative to introduce trading and options to all of those that haven't yet come to understand the power and the importance of options within your portfolio. So with that, if there are no questions, I will wrap it up.
Yeah, there's a couple questions.
Oh, good.
I can read
Okay,
them.
great.
Do you use ATR in your options trading? If so, how do you use it? Wrote that in.
I think ATR, they're referring to a specific, it's a specific trading algorithm. And no, we do not. What we do is we are actually just giving you the trades to go in and to go out, and we have our own system built.
Oh, average true range. Okay, that's what he's.
Oh, is that what they meant? Oh, okay. I thought they were
Okay.
referring to.
I thought that sounded like an indicator or something.
Okay. Okay.
Yeah, average true range.
Okay. No. We have, I mean, we're using obviously 50-day moving average, we're using RSI, we're looking at fundamentals, which are so interesting to combine with that. Next.
Where do you see the TLT going in the months to come up to the elections?
I think the TLT, which I've been looking at for many years, and those are like the inflation adjusted treasuries. And it's tough because people originally, the TLT was a great protection in terms of if inflation was going to be an issue. And now we've heard that Chairman Powell has said that inflation, he's willing to let inflation go up above 2%, which is kind of interesting. And but the TLT, I mean, it's just hard to say where it's going to be because it's become a vehicle unto itself that is being used for trading and not just for going into it as a means for protection.
Okay. And do you have any comments or thoughts about CFD trading?
No, I do not.
Okay. Let's see. I think that's everything.
I want to just thank everyone, though, for participating, being online. I am going to be at the Traders Expo next week, on both this week, actually on Saturday, and then I'll be presenting on Monday. That's the Money Show's trading event in Brooklyn, usually in Times Square. I'll be at the Money Show in Las Vegas in May. We're on the exhibit floor there. I spend a lot of time talking to, mainly I have my subscribers come, and it's an opportunity for me to spend time with them and really get to know them. And I'll be there. And of course, anyone who is a subscriber, you would have the inside onto we have analysis, we give commentary, but when it comes to actual trading and options, you get this text message, you get it by email, and we tell you when to go in and we tell you when to go out. And we're here and we're accessible. Even though we have thousands and thousands of subscribers, we have such a broad team that we're able to be responsive to everyone. And I thank you so much. And
one other question here. Does your strategy work with Forex?
No, we don't do. I mean, we'll look at Forex to influence what we might want to do with our actual indices. Like, so if we see dollar strengthening, and we think that money's coming into our market, we might go and we see that there's opportunities. We'll play off of what's going on with the market itself. I mean, obviously, it's unprecedented times, with what's going on. I think the yen's like around 105, and a falling pound, a falling euro against the dollar. So, but Forex is not something that we're not trading against any, we're not using any kind of Forex vehicle. We just use that as another indicator, another input point in helping us make investment decisions.
And there was a couple questions about account size. So does this work for small accounts, or does it work for really large amounts of cash, or what kind of range?
Yes. The beauty now is, of course, now that the Fidelities and Ameritrades and all of these, Charles Schwab, I mean, you have zero commissions charged. It makes it that it's financially, it's feasible now to come in with a small sized option. So you don't need to have, I mean, you can do each one of these two-day options with $500, let's say. You would want to make sure that you start with probably about, you say you're going to allocate $1,000. That, of course, you would want to do. But we have those that, I gave the example of the person who started with 60,000. Trying to think. I had someone in Texas at a money show come up to me, and he had just done, because we also have High Octane Trader, which is options on stocks. And he had done $24,000 on a Qualcomm trade. And he was all excited because he had actually been flying to Texas from Arizona, missed the sell, but had actually printed out a sheet showing me how much he had made, because he was still lucky enough when he got off the plane, the trade was even more so in his favor. So, yeah.
Okay, great. I think that's all the questions. So
okay, that's great. That's great. Again, it is a money back guarantee for anyone who wants to try this. And don't hesitate to also just call if you want to ask more questions, you want access to me or my team. And options are really, really a great way to put some leverage and octane into your investing. If you have the time, you do it. Always know, I have to say this, it's the most important disclaimer I can possibly make. Never, ever, ever put more than 5% of your entire portfolio, your liquid money, ever into options. You can make tons of money by allocating 2% of the money that you have, the liquid money you have, into options, because you saw these returns are phenomenal, incredible, 1,400% in a matter of just months. And that's just not even doing the rolling, let's say, just adding them all up, doing each one with the same allocation each time. So please, everyone, be careful. And if you do really well at first, scale it back. Don't go more and deeper. that's how you can just lose everything. And so that's I think my biggest worry for everyone. Do it, enjoy it, make a ton, buy yourself a car, but always know that fundamentally you want to have almost everything in a long-term diversified portfolio, and always have enough cash so when the market goes down 12% like it did last week, you look at it as a buying opportunity. You can say, I want to buy Boeing at $290 a share that was $440 a share 2 months ago or 3 months ago. That's what market downturns should be for. They shouldn't be a time where you're not sleeping.
All right. Sounds great. Thanks. Thanks, Hilary.
Okay. Thank you to all. God bless you, and the best to everyone in our country.